So friends, let us understand what are the other changes which Budget 2021 proposes with respect to GST. Friends, various other changes have been proposed by Budget 2021 with respect to Section 74, Section 75, Section 83, Section 129, Section 130, Section 107, as well as Section 151 and 152. So let us decode these changes. The very first section which we discussed was Section 74, which is proposed to be changed. When you look at this section, there is one explanation which is provided under Section 74, which says that if there are any proceedings which are issued or ongoing against the main person or other person, and in such cases, when the proceedings under Section 73 or 74 are closed, then all other proceedings which are initiated, including proceedings under 129 and 130, that is proceedings which deal with detention as well as seizure and confiscation of goods, will also come to a closure. That means if you close the proceeding under Section 73 and 74, practically proceedings under 129 and 130 also would have been closed. However, now there is a major amendment which Budget 2021 is proposing. And as per this amendment, the proceedings which are initiated under 73, 74, typically these proceedings are issued or initiated against the supplier of goods. And proceedings under Section 129 and 130 are initiated typically against the transporter. So what the change says now, that these proceedings will parallelly continue. That means practically parallel proceedings going forward would be a reality. So even if you as a supplier, you are closing the main proceedings, still the proceedings under Section 129 and 130 might continue against the transporter. And that is a major change. That means what? The government want to curtail the situations wherein people are supplying goods without issuing a valid invoice or valid e-way bill. So this is a very major or critical change which could be of relevance to all of you. Friends, apart from amendment in Section 74, there is another major amendment which under Section 75 which the government is proposing. Under Section 75, there is subclause 12. As all of you are aware, typically Section 75 deals with determination of tax. And this subclause 12 talks about the fact that if you are declaring any GST liability under Section 39, that is under your GSTR 3B, so you are declaring, you are admitting that this amount I am liable to make payment to government, then in such cases, the government can directly recover that amount. The government can directly recover that amount under Section 79 without issuance of any show cause notice. Correct? So this section, that is 75 subclause 12, only talked about GSTR 3B, that is written under Section 39. Now there is a specific explanation which is proposed to be introduced under Section 75 subclause 12. And as far as this explanation is concerned, it talks about self-assessed tax. And it says that it will include even the self-assessment tax which you are declaring under GSTR 1. Now the first question which will come to your mind would be, why this amendment? Friends, you would have seen there are various situations or scenarios wherein the tax authorities have unearthed the fact that certain taxpayers were filing GSTR 1, declaring the liability in GSTR 1. However, they were not filing or they are not paying the GST which was applicable on the supplies which were declared in GSTR 1 in GSTR 3B. And that's the reason there was practically underreporting of turnover in GSTR 3B. And thus the government now want to ensure that if somebody is declaring any turnover, any supplies in GSTR 1, then practically the amount can be recovered from that supplier. So friends, with this major amendment in Section 75, we would say that when the government is talking about input tax credit availability to the recipient, only when the tax is to be paid by the vendor, with this amendment, one can always say as a recipient that the government have all the power to recover taxes from the supplier. And that's the reason, as a first step, the government should not deny the valid right of the recipient. Rather, if there are any proceeding to be issued, then first the proceeding should be initiated or issued to the supplier who is not paying taxes or to the vendor, rather than troubling the recipient whose valid right to claim credit is getting jeopardized, particularly in scenarios wherein the vendors are not filing or paying appropriate taxes to the government. So that is a major change which we discussed, which was there under Section 75. Friends, apart from this amendment, there is also another major change which is proposed under Section 83. As all of you are aware, Section 83 deals with provisional attachment. Now, in case of provisional attachment, in the earlier section which was there, before the budget amendment, in this section, there were around 6 subsection or 6 sections which were proposed or which were covered, wherein if somebody is not paying taxes, then in such cases the government can provisionally attach his property or provisionally attach his bank account. And which were these sections? The sections were section 62, section 63, correct? So typically a person who is not registered, correct, somebody who is not declaring, so in a case of search and seizure, so only in severe cases the government authorities had power to recover taxes or to provisionally attach the property under section 83. Now the government is proposing to amend this section in budget 2021, and now instead of 6 scenarios which were covered earlier or 6 sections which were covered earlier, now the government is intending to cover approximately 24 sections under which the government can provisionally attach your property or provisionally attach the bank accounts. Now please note that even in case of scrutiny of returns, if it is found, if the tax authorities find out that you are short declaring or not declaring appropriate liabilities, even in such cases your bank account or property can be provisionally attached. Now please note, this is a very stringent or very strong power which the tax authorities are going to have, and given this, it would be preferable that the taxpayer files appropriate return as well as declares appropriate liabilities in their GST returns. Friends, you would have also seen that from 1st of January 2021, the government has also proposed certain amendments in the rules, wherein the power to suspend your registrations were also given to the tax authorities in cases where you are short declaring your GST liability. So please note that these are very stringent powers, and given this, it is becoming now more and more important for all the taxpayers to declare their liabilities appropriately. Friends, there are few other changes also, such as one change in section 107 subclause 6. This change practically talks about the fact that if there is any proceedings, correct, against which you want to file appeal under section 129 subclause 3, in such cases you will be required to make payment of 25% of penalty. Now please note, under section 129, now the government is proposing that there would be a 200% penalty which would be applicable. So 25% of 200% would be 50% penalty which you will have to pre-deposit, then only you would be in a position to file the appeal. So that's the change in section 107. Friends, apart from changes in 107, there are few other changes also, such as changes in section 129 and 130. 129, as all of you are aware, deals with detention and seizure of goods and conveyances, and section 130 deals with confiscation. Now please note, under section 129, in certain cases, if the goods are seized, then the goods could have been released, correct? The goods could have been released if you were paying a tax payable, that is 100% tax payable, as well as if you are paying 100% tax penalty. So effectively, you are supposed to pay 200% amount to the government. Now, instead of asking you to pay 100% tax payable and 100% tax penalty, the government is saying that you should make payment of 200% penalty. Now, what are the implications of this change? Prima facie, this change appears to be very simple, but friends, please note there are very severe implications of this change. And what are these implications? The first thing which you need to know is that 200% penalty is payable. That means you cannot make payment of this 200% penalty by utilizing input tax credit. You will have to use the cash ledger balance only. Because before this amendment, the provision said 100% tax payable and 100% penalty. In such cases, the 100% tax payable could have been paid by you by utilizing input tax credit. However, going forward, the payment under section 129 has to be by way of cash payment only. That's it, not through ledger. That is one critical change. Second important thing is that if somebody is making payment under section 129, then the recipient could have claimed the credit of that tax payable, although it was not permissible per se, but still, particularly in fraud and other cases, suppression cases, but still that was a possibility. And obviously it was not, we will not also recommend to claim the credit in case of frauds and all, but that was a possibility or probability that somebody might have claimed the credit of the tax which is paid under section 129. Now the government is saying that you will not make any tax payment under 129. That is, earlier the section said 100% tax payable and 100% penalty. Now instead of that, 200% penalty would be payable. That means if you are making the entire amount of penalty to the government in cash, that still means that recipient cannot claim any credit whatsoever, because you cannot claim credit of the penalty being paid. So that's the reason, friend, this is again a very major development as far as section 129 is concerned. So just keep this important aspect in mind. Additionally, friend, when you talk about penalty, please note penalty is leviable in case of certain violations. As far as tax payable is concerned, one can always take a stand, but one could have taken a stand that there is no supply, so there cannot be a tax payable, correct, before the amendment. But after the amendment, practically if there is any lapse, correct, irrespective of the fact whether the transaction qualifies as a supply or not, correct, in such cases you might be required to pay 200% penalty. So we would say that this is a very severe penal consequences which the government is trying to propose, even in case of smaller lapses with the taxpayer or transporter might do. So just be very careful as far as compliance of section 129 or 130 is concerned. That means don't indulge into movement of goods without having valid invoice or without having valid e-way bill. Friends, apart from that, section 129 subclause 2 is proposed to be deleted. The subclause 2 said that on a provisional basis you can release your goods, correct, by furnishing a security or bond. Now that reference of section 67 subclause 6 has been deleted. That means that possibility has now gone. That is again a very major development. Apart from that, because section 129 deals with detention and seizure of goods as well as confiscation is dealt with by section 130, what the government is saying now, once the goods are detained, they want to ensure that the proceedings are closed in a very fast manner, correct? And that's the reason they are saying that the authorities will issue a show cause notice within 7 days and pass an order within next 7 days. So that's a very quick proceedings, and that's the reason, friend, in cases where your goods are detained or seized, you have to be very quick in taking action, submitting appropriate details with the tax authorities. So be a bit careful about this. Otherwise, the order would be passed without any submission being given by you. So friends, these were the major changes as far as section 129, 130 or 129 is concerned. Friends, then as all of you are aware, as we discussed, that section 130 deals with confiscation of goods. Now, section 130 is the government is trying to delink this section 130 from section 129. That means the penal provisions under section 130 would be independent practically of section 129, because earlier there was reference of section 129. Now that reference has been removed. So that is another important change which all of us need to keep in mind. Friends, apart from that, there are few other sections such as section 151 and 152. Please note that section 151 and 152 dealt with power to collect statistics, and this power under section 151 was given to the commissioner, but this power was restricted only and only to statistics, and this power was not, it was argued by certain taxpayers that this power did not give the commissioner a power to collect certain information. Now this section, that is section 151, the government is trying to substitute with another section, that is section 151, wherein the power is given to the commissioner to collect information. So earlier the power was only to collect statistics. Now the power is given to the commissioner to collect information. What implication this amendment is going to have? Friends, now the commissioner, the honorable commissioner, will have power to collect any information with respect to any matter from any person. And that practically means that the commissioner can collect any information from your customers. The commissioners can collect certain information from your vendor. The customer can collect information from your banks. The commissioner can collect information from any person with whom you are dealing, and even that person might be a consultant. Correct?